Everyone, it's Josh here. How we doing? Don't forget to subscribe to this channel, and also you can share this video with others so that they can benefit. Now for today's lesson, we're going to be looking at trading in the blockchain and crypto aspects. We're going to be looking at trading. So I'm going to be talking about the various types of trading. Then I'm going to also be talking about how to place trade on market price, how to place trade on limit price, and also what is leverage, how to apply proper risk management to a trade. So let's dive in. Now let's just go to an exchange. I'm going to be doing a live practical on how to place trade and I'm going to be doing this on Bybit exchange. Now we already know what is an exchange. An exchange in terms of crypto is where buying and selling of digital assets takes place. We have a lot of exchange. We have Binance, we have Bybit, we have Bitget, we have Mez, we have Obi, we have OKX. So you as a trader, you should know the kind of the best exchange for you that suits your trading. You should know the interface, how it works. Now we're talking about trading. You just like buying and selling. There must be buying and selling for you to have a trade. Somebody is going to be selling and somebody is going to be buying. So we're talking about trading, or trading in crypto aspect, talking about buying and selling between two parties. Then in crypto, it happens on an exchange. We have the centralized and we have the decentralized. So we're talking about on the exchange that is centralized. Now, since you have gotten a better understanding of what trading is, then let's look at types of trading. Now if you come over to Bybit, if you're looking at this top, you're going to see spot trading. You're going to see spot. Alright, we're talking about spot trading. How is spot trading done? It's simply done, you buy an asset when the price is down, then you sell when the price is up. So you can hold an asset for 1 year, 1 month, 2 weeks, depending on your choice. So when you say spot trading, it's just all about buying an asset at a spot at a particular point, then you waiting for the price to appreciate, then you also sell at a particular point. So when you are buying on spot, you might not really be having shortage or losses, because you just want to buy and hold. Though the price may fall, may go down, the price you might have some depreciation, but the matter of time you might see the price start appreciating. It all depends on what? On patience. Alright, that is spot trading. Then if you also check at the top, you have what we call futures. We're talking about futures. We're talking about you predicting the market movement. You predict if the market is going to go up or if the market is going to go down. We'll call it futures. So for futures trading, it's kind of very volatile. That is why it's kind of very volatile. That's why before you start trading futures, you must have gotten the necessary knowledge that you need. Knowledge to apply your proper risk management, knowledge to properly apply your leverage. Know your leverage that you are going to be using. This 5x leverage or 10x leverage. So that is futures for you. Then for futures, you can see in some exchange they will put buy and sell, but if you see what you have here on Bybit, it is long and short. One is the green button, one is the red button. Now for buy, in some exchange I use buy, it is also green. Some I use blue. Then when you say sell, it is red. Some will say long, which is buy, short, which is sell. So you should know that long or buy is the same thing, then short and sell is the same thing. So you're going to see that in some exchanges. Then also you're going to have what we call, if you're looking at this point, you see what we call isolated. I'm just going to try to explain some basic things of what you need, what you see on an exchange, especially in the future. Sometimes you can see them also on spot. Now if you click on that drop button, you can see what we call crux and isolated and portfolio and more details. But for most of the traders I've seen, it is always on isolated. All right, what is the advantage of you using an isolated? Now if you place a trade with $20 and the market turns against you, now when you see isolated, it means that even if you still have additional funds on your wallet, they should not tamper with that fund. All right, so if your $20 which you are using to trade gets liquidated, the money in your wallet, it still safe. All right, so ensure that before you place a trade, ensure you always ensure it's on isolated. Don't put it on crux. If it's on crux, it simply means that if the $20 you are using to trade, so if it's on crux, it means that if the $20 you are using to trade, they can collect other funds from your wallet to start filling up in the trade. All right, so that is why you ensure that you always put it on what? Isolated. So if my $20 is exhausted, don't touch my funds in my wallet. That is what isolated means. Then cross means if my $20 is finished, you can take more funds from my wallet. So for you to be safe, now for you to stay in the futures market, you must know how to apply proper risk management. All right, because you are predicting the market movement, and the market does not belong to you or your family members, so you don't have control over it. Now what you need to understand about futures trading is you understanding what the market wants to do and you key into what the market wants to do. All right, so before you trade futures, you should have basic knowledge. That is for that. Then if you're also looking at this point, you see what to call 10x. We'll refer to that as your leverage. Your leverage is what gives you access to the market using a small capital. Let me say you are having $5, you can borrow additional $5 from the market makers to add to your funds to get a position to trade in the market. Now the disadvantage of leverage is the more leverage, the higher your leverage, the more money you are going to make if you are in the right direction. Then also the disadvantage is the more your leverage, the more money you will lose if the market is against you. So this is where you apply proper risk management in your leverage. So your leverage, some assets are very, very volatile, especially on Bybit. You see something like this asset is listed on innovative zones. So those kind of assets that are on innovative zones, they are very, very volatile. So for you to be able to trade them, you can go as far as using just 3 or 5x leverage because of the volatility of the coin. Then there are some assets like those stable coins like Solana, Ethereum, and BTC, when there is no news coming on CPI or so you can trade those ones using 40x, 50x, 75x. But when you are trading some shit coins and you see from the interface of your app, you can see the volatility there. You are to ensure that you apply proper leverage. All right, so leverage is one key thing you must know. Is one thing you must know that is needed in applying proper risk management. Then I'm going to be placing a trade so that you know how to place a trade. All right, now if you click on this aspect, you see what to call limits. There is a drop down menu there. When you click on where you see limit, you're going to see limit, market price, conditional, chase, limit order, scale order, T-swap, and iceberg. Now I don't really know much about the conditional or the chase limit order or the scaled order, but all I know is the two I just know I use and most traders use are either you are trading on limit order or you are trading on market price. Now if you pick on market price, it simply means you want to enter the market with the current price at which the asset is trading. Let me see, let's say this the asset is trading on 0.12483 dollars. So if I say, okay, I want to enter into the market either on long or short, after doing your analysis, the futures trading is not what you just come in and just dive in and just jump in and feel like, okay, I want to trade. No, you have to use basic tools. Some people use as far as using this screener, some use trading view to do their market analysis. So for you to be sorry so for you to be a futures trader, you must understand technical and fundamental worth analysis and also risk management. So when you click on market price, let's say you have checked it, you have been able to check your chart, you read through your chart, and you observe that the market might not get to the point you want to get to, because sometimes you might be waiting for the market to come to the resistance or support area, which might not get to that point, but you just want to enter that price. You just simply click on market price, either you are going long or no short, depending on where you are going to, then you enter the market. Now when you enter into the market, the next thing you are supposed to do is to ensure that you go and set your SL fixed. XL. For every trade you are going to be taking on futures, you must make sacrifice for coins, some amount you are going to lose. Let's say you can say, okay, I want to sacrifice $2 or $3 in case I don't want to lose more than $2 or $3. So for every futures trader, we do that, and you must do that. You must make room for what? For losses. It's more like you are saying you are designing for the worst condition. Just when you are designing for the best, you are also designing for the worst condition. So that is how what you need to know about market price. Market price, you are entering into the market based on the current price the asset is trading. Then when you come to limit order or limit price, it simply means you want the price to get to this particular point before you dive into the market. All right, we're going to be doing a live practical with this. We're going to be a live practical on how to trade on limit order. Now I want to enter into a trade on limit order. Now I've done my analysis. Let's say I've done my technical analysis, I've done my fundamental analysis. I observe that by the time the market get to this point, there's bound to be some support. A lot of orders have been placed at that particular point. So what I simply have to do is I'll click on limit. It's already on limit. I just click on limit. Then I'm going to enter. If you check here, for you to trade on limit, if you check here, you're going to see price. So you are going to enter the price at which you want to enter the market. All right, you're going to enter the amount. So let's say I want to enter the market at 0.12075 after doing my technical analysis. Then how much of your funds do you want to use to trade? Now this is a practical video. All right, now you can see this particular portion here. There's this portion here. If you click on this point, you are using 25% of your capital. If you click on the next dot, you are using 50% of your capital. You click on this, you are using 75% of your capital. If you click on this, you are using 100% of your capital. All right, so you must know how to place trade on limit order. And whenever you see a signal, either you are the one analyzing the market or somebody is giving you a signal to trade, always check if it is on market price or on limit price. If the person says on limit price and you decide to enter into the trade on market price and the market go reverse, you know you are going to lose your funds. Don't blow away your account. So once you have done inputting the amount you want to use to enter into the market, then you tick on where you have TP and XL. TP simply means take profit. SL means stop loss. Now when you say TP, it simply means by the time the price get to this point when I'm in the market, please take my profit and close the trade. All right, then SL means if the market reverses against me, by the time the price get to this point, please just close the trade. Don't allow me get further loss. I don't want to lose more funds. Just throw me out of the trade. Close the trade. Now like I said, you must make room for losses for your trade. Then for TP, this is what I'm going to impute, where I want to take my profit. I'll say 0.13086. Now this is where I want to take my profit. Then for my stop loss, I'll say, okay, I want the price to get to, when it get to this point, please just close the trade. And if you check when I imputed this here, you can see how much I'm going to be getting in profit if the peradventure the price gets to that point. Now this is it. I'm going to be making $9.5 if my trade triggers. Your trade will only trigger when the market gets to that point. Please note, that is when your trade will trigger. Now if peradventure the price does not get to 0.12075, the trade will not trigger. It will just remain like that. It can only trigger when it gets to 0.12075. all right. Now another thing you must note here, if peradventure it gets to 0.12075 and you are predicting long and the market is still going short, now by the time the price gets to where you imputed as your SL, it's going to trade, it's going to close, the trade will automatically closes himself, but you also have to take your losses because your prediction was let the price trigger at this point and give me profit when it gets to this point. Unfortunately, it was triggered at that same particular point you asked it to trigger, but instead it did not reverse because you said, okay, when it gets to this point it's going to start going up, but instead it got to that point and was still going down to go and eat your SL. So for my SL, I will impute 0.11783. now if you check what I'm having here, if peradventure my trade triggers and it refuses to reverses to the upward direction, which is long, it triggers and it's still going down and it comes to 0.11783, which means I'm going to be losing $2. I've made sacrifice to lose $2 in my SL, which is stop loss. Then if it does not go that way, by the time it gets to 0.12075 and it starts going up and it gets to 0.13086, I'm making $9.5. all right. So with this, I have been able to impute what I call proper risk management. I'm losing just $2. If it goes against me, then I'm making $9.5 if it works in my favor. So I've made rooms for my losses and for my gain. Then you will see long and short. I talked about this. I said long mean buy, short mean sell. You can see some exchange will say long, some will say short. So I'll now state where am I predicting the market movement. Like I said for futures you are predicting the market movement. Are you predicting the market will go down, or you are predicting the market will come up? So market price, I'm entering at that price. Limit order, I'm predicting that by the time the market gets to this point, there's bound to be some reversal to the uptrend, or there's bound to be some reversal to the downtrend. So for my prediction, according to my market analysis, I want to go long. So immediately I'll just click on what? I'll click on long. I'll say long. I will confirm my trade. Now immediately I confirm my trade will now be on what? On order. My trade is on order. By the time my trade triggers, it will now enter into what? Position. You can see position, you can see order. But since my trade is not running yet, it is more on order. So by the time it gets to the trade triggers, it moves to what? It will still be on order because the trade was placed on order. It will start running on what? On position. If I have entered on market price, my trade would have been on position. Maybe it would have been on what? On position. All right. So you can still come over here to do some modification when the trade has not triggered. Now once your trade has triggered, The only three adjustments you can do is, one, you can adjust your SL when the trade is in your favor. Once the trade is against you that you are losing money, you cannot adjust your what? Your once the trade is against your favor, you can adjust your SL. You can move SL to be break even. All right. Then also you can adjust your take profit. If your the take profit margin is too much, you want to bring it down to something you know it is achievable, you can say adjust your what? Your take profit. Now the only way you cannot adjust your SL is if the losses, you cannot take it to a point. Let's say you initially you initiated your SL to like, okay, I'm going to be losing $5. All right. Then when you're already losing $4, you want to adjust it so that you'll be losing $2. It will not work. All right. It will not work because the market has already gone too much against you. So you can only adjust it when it has not gotten to the point you want it to get to. Let's say you want to lose $5 and you're already losing to, like, decide to adjust it to just lose just $3.5. That is proper. You can adjust that. Then also you can also make some adjustment when you are in profit. You want to take partial profit. You can adjust, make some adjustment when your trade is already running in your favor. But once your trade is on and you are losing, okay, you are losing $5, you want to bring it like, okay, let me bring it so that I'll be losing just $2. It will not work. So the secret to futures trading is proper risk management, watching your leverage, watching your SL. And as a trader, I always say don't adjust your SL. Let's say you place your SL, you are losing $10, you start to adjust it to come and to go to $15. Don't do that. If you are losing $10, just allow it to be $10 win. The reason you are losing is because you did not really understand the market trend. Sometimes when you get a clear understanding of the market, you can come back and make the proper adjustment. Now I've talked about spot trading, I've talked about futures trading. The last type of trading I want to talk about is Degen. Now Degen is not done on exchanges, it is done on decentralized wallet. Degen, when you connect your wallet to a link like your your swaps, where your various swaps, you have like your iSwap, like your Uniswap swap, your Pancake swap. Then you decide to use a contract address to buy a token. Let's say you want to buy a token on Phantom Wallet. Then you decide to connect your Phantom Wallet to Pancake swap. Then you use a contract address to swap from Solana to that particular token, either Jupiter or any other token, or Bubble Map on the Solana network using their CA. That is Degen. So Degen is not done on exchanges, it is done mostly on wallet like your OKX wallet, your MetaMask wallet, your Trust wallet. So that is the third type of trading commonly known. All right, so I guess you have learned a lot from this video. For those that want to go into trading, if you want to go into futures, you don't know how to analyze the market, you can just look for somebody that understands technical fundamental analysis. When they drop signals for you, just know how to place trade on market price. When they say market price, now before you enter into a trade, I think I'll just go to my Telegram handle and just show what I mean by, so that you have a clearer understanding of when I'm talking about placing a trade. Now if you check these trades that are here, you will see that this is an order price. The order price is the same thing as limit price. So it means by the time the market get to this point, put me on trade. You can see that for every order price or limit price trade, there must be a TP and an SL. All right, you must have a TP and an SL, which is take profit and stop loss. And also, if you want to enter a trade on market price, ensure you apply your TP and SL too, so that you don't end up being thrown out of the market, or your account get liquidated, or when the market decide to turn against you. Because sometimes within the twinkle of an eye you can get what we call um, um, somebody might decide to sell up a whale or market manipulation. You find out that the market will just crash. So when you enter into a trade, the next thing you should do is go and adjust your SL, put your SL and your take profit. So this is what you need to know about trade: how to place trade on SL, how to place trade on limit order and market price, and how to place trade buy on spot and Degen. So I guess you might have learned something from this video. Ensure you share this video with those that won't really want to learn. Once again, my name is Josh. Subscribe to this channel so that you might be getting more updates. We'll not be doing it gradually. Maybe we want to start entering into technical analysis, how to use TradingView, the mobile versions, to trade. So we're going to be gradually going into that, how to analyze your entries, how to take entries, how to take risk management, and so see you again in the next video that I'll be dropping. Bye bye.